Hello and welcome to Daily Market Movements. Welcome to another episode of Commodity Watch. In today's video, we are going to be analyzing the crude oil and gold price charts as always. Today, the date is the 1st of December 2021, which means it's the last month of the year. Where has the year gone? I can't believe it's already going to be 2022. It's been a fantastic year for trading, especially in the stock market where we've seen lots of upside movements, and of course in the energy market as well. Energy has been one of the best performing sectors of the year with this huge rally, as we did go to minus, I think, $40 at one point last year in 2020 when COVID first hit, and of course we've rallied all the way up towards $85. So for those who trade oil, I'm sure you've made a significant amount of money, especially if you've been buying crude oil. But we have been given some fortune here in the past couple of days with the crude oil markets with a lot of volatility. Of course, last Friday we fell, I think that was 13% from $78 all the way down to $68 a barrel. And yesterday we were really battling with this 23% Fibonacci retracement level. I was looking for the close yesterday, okay? The close was the most important part of this market. At one point, we dipped as low as $64, and when we were trading this low, I thought, oh my God, we're going to go down and retest the very bottom of this fib level all the way down at 61, maybe $62 a barrel. But luckily enough, during the close, we managed to pair most of our losses, and we pretty much closed on that 23% fib level, which is currently sitting at around $67. So very encouraging, and I did fully anticipate a bullish start to the trading session this morning, and that's exactly what we've got. We've broken back above this 0.23% Fibonacci level, and we did at one point go and touch the 200-day EMA at $69 a barrel. Now, going forward, it's all about whether we can get that daily close above the 200-day EMA. I'm not interested yet in this 0.38% Fib level. What I'm really focusing on is this 200-day EMA. If we can break above this level here, that's then when we go and try and take out these swing highs that you can see here, and eventually that 0.38% fib level, then we got to 0.5%, and then eventually we have that 0.61% fib level and the 50-day EMA all the way up here. So don't get me wrong, oil has its work cut out, but I think on Friday we massively oversold towards the downside. Then on Monday we bounced and overbought towards the upside, and yesterday I think we overdid it towards the downside. And I think this week's all about finding that that balance, that level here in crude oil, which we can eventually work off and build up a new technical structure and return back towards $80. But I'm extremely confident that we will get back towards 80. In fact, I anticipate a rally towards the upside. Myself and the Signal team over on our private Telegram channel, we currently have a buy position here, and if you would like to know what exactly our entry point, our take profit and our stop loss is at, then you can watch the end of this video where I explain how you can become part of that private group. But I am bullish here in crude oil, and I do favour a move up towards 80 and then eventually 85, as some analysts are still calling for $100 crude oil going into 2022. Moving over to the gold markets. Now, gold, very interesting. I myself and the rest of the team over on the Telegram private channel have a sell position here in crude oil. Again, if you'd like to understand that entry point and where I'm targeting and a stop loss, you can head over to our streaming service, and once you subscribe there, you'll gain access to our private Telegram group chat, and I will explain how to do that at the end of this video. But crude oil looking very bearish. On several occasions, we've attempted to break above the 50 and the 200-day EMA, and we failed to do so. Yesterday, we had the Fed come out and announce that he wants to end the tapering process a few months earlier than initially stated. And this, of course, is extremely bearish for gold. And I think it's all about this level here, that 1770 area where that 0.23% Fibonacci level is. This is the last fib zone. If we can break below there, then I think we go and target 1724. And if we break above there, we go towards this 17 to 1680 area. So gold really not looking very strong at this moment in time. And I do feel bad for those who've been waiting since August 2020 for this massive gold breakout. We had that false breakout not so long ago where we achieved prices up at 1877, but it turns out that it was just a false breakout. So not what you want to see if you're a gold bull, but I'm selling gold at this moment in time, so it's exactly what I want to see, and I'm very confident that we will get a further breakdown here in the gold prices. But most important of all, the most important technical negative that I can see occurring here is that on the daily chart we are about to get a death cross. That's where the 50-day EMA pierces above the 200. And the fact that we've just pierced above the, we pierced above the 200, causing a bullish crossover, and immediately we've been rejected here. That tells me that the bears have got full control of this market, and I really do anticipate to see a further breakdown here in the gold market. So I am bearish, and we have a fantastic signal over on the streaming service where I have been posting videos this week. In fact, last night I did a very important and very in-depth analysis video here on the gold chart, as we go into the end of this week and of course into the final month of the year. But that's it for today's video, guys. I thought I'll just come on here, give you a brief update with regards to the gold markets and crude oil. And that is going to wrap it up for today's video. But just before I let you leave, I just want to quickly show you our brand new streaming service. We've recently launched this website that you can see in front of you. This is where we provide in-depth analysis videos as well as trading signals via our Telegram group chat. How it works is really simple. We have two subscription plans. First one is a monthly fee of $19.99, and the second plan is only $209.99 for a year's subscription. Once subscribed, you'll then have access to all of our in-depth analysis videos, as well as access to our private Telegram group chat. We cover various markets such as commodities, US stocks, indices, and cryptocurrencies. We also have a video category where we provide educational content so that you can improve your trading skills. If this sounds appealing to you, then you can find our website link in the description of this YouTube video at dailymarketmovements.com. If not, then I would just like to take this time to say thank you for watching today's YouTube video. Please give my channel a subscribe and give this video a thumbs up. Thank you very much, and I hope to see you again soon.